Hi, everybody. Hey, how you doing today? I should tell our panelists um, that one of the little traditions that we have in Ask a CPA is I get excited as each of the people joins the room, and I would start waving to them and being like, "Oh, I'm so excited to see you. I'm glad you're here." And then I realized they can't tell who I'm waving at, right? Because we're all in a Zoom room, and so it's kind of like, "Oh, hi, hi, hi." And so we decided at one point that if I'm waving, you should presume I'm waving at you. And when I announced this, all of a sudden, everybody waved back. And it was like the most beautiful little moment that we all shared together. It was just fantastic. So I'm waving at you. Hi,
I
I'm glad
expected
you're
you to say
here.
that you do a dance every time somebody comes in.
Oh, God. I would get a lot of really good exercise if we did
Yeah,
that. I
five
love
feet.
that, Andrea. That's a great idea. Maybe we should start that as a tradition. Well, I am going to get started right off the bat here because we've got an hour and a half and we've got such amazing guests that are here. As everybody knows, all of these sessions are recorded and they are also, when they are posted, they are timestamped and linked to each of the questions. So if somebody has a very specific question that they wanted answered today, they will get a chance to watch the answer to it later on, even if they're not here live. Um, I am so excited about today's session because we had a ton of requests for this one. Um, my second monitor is not working, and as a result, I am going to have to read off of these notes right here. This is actually kind of fun. Gives me good arm workout. Bookkeeper Tax Pro collaboration questions have always been a tough set for me to answer because, as y'all know, we do both bookkeeping and tax prep internally. Um, and so we don't spend as much time coordinating externally, although we do have a few of those. We don't spend as much time coordinating externally with uh, either bookkeepers or tax pros as some other folks do. You also know that I'm obviously already passionate about collaborating, because that's why we're all here among the members of our team, as well as with external bookkeepers and tax pros when we work with them. I have thoughts about what it should look like, but the reality of my situation is that I'm just one person. There are very, very few standards for what this relationship looks like in real life. So everyone does it a little bit differently. And so, not surprisingly, we've had quite a few folks ask if they could pick the brains of some other tax pros. So, ask and ye shall receive. Let's welcome our amazing panelists today. They are each going to go through and share their name, location, a bit about their firm, including its size, whether they only do tax or they do both tax and bookkeeping, and what their work with a bookkeeper collaboration style looks like. So, we're going to start with Olivia. Welcome to our group. Thank you for
Hello,
being here.
lady. Um, my name's Olivia Henley, and I have a tax and accounting practice in Sacramento, California. And let's see, we have a pretty small firm. There's only four total people who work here, including me. So we keep it kind of limited on the number of clients that we accept. And from a collaboration standpoint, I'm always happy to work with someone's bookkeeper. Um, but I am pretty collaborative, so I don't just like accept something they send me and then just do a tax return. Usually I try and have a meeting with the bookkeeper before we even do tax prep and go through the books together, make sure any questions they have are answered, any questions I have are answered. And then sometimes after we're done doing the return, we have a secondary meeting just to quickly recap maybe adjusting entries that I made to tax a book or book to tax or whatever. And generally, I just want them to be reaching out to me, not doing weird things, maybe. And then I have to fix it like right as I'm trying to do the tax return. I prefer to be more collaborative during the year.
I am thrilled to hear that. And approximately how many returns do you do? Because you're mentioning you only have four people, but I remember you do a pretty big
We do
volume.
about 400 returns.
And so you're four people, everybody's full time?
Yes, all four
Okay.
people are full time.
All
Mhm.
right, cool. Awesome. Katie.
Yes. Hi, everybody. I am Katie Healy. I am the owner of Scaled Accounting Solutions located in Chandler, Arizona. I have a very small firm. I actually just left a firm of 15 years
Woo!
to go out on my own. Yes, it is very.
Congratulations.
Thank you. So I am a very small firm. The reason I left my old firm was I needed a better work-life balance. I have a small child and she is my world and I needed to spend more time with her. So here I am. I've had a side hustle for many years, just doing accounting services mostly. And now that I'm out on my own, I'm doing tax and accounting and advisory services for clients. So right now I have about 60 clients total with tax and bookkeeping. My bookkeeping clients, I have about 15. My goal is 20 monthly recurring clients. And my max number of tax returns that I am willing to do initially is 100. So I am well on my way and I anticipate meeting capacity probably before the start of tax season.
Congratulations,
Thanks.
Katie. We're
Yeah.
so proud of you.
Thanks. It's very exciting. It was very scary, but now all the scaries have worn off and it's just a lot of fun and exciting. So I'm excited to be here. As far as collaboration, as far as meeting, with bookkeepers, I personally am like Olivia and I like collaboration. I love, reviewing changes that I have to make to books with the bookkeeper so they understand my perspective when preparing a tax return, like things to look out for. A lot of times, if the bookkeeper doesn't have time to meet, or maybe the business owner doesn't, really find it important for me to communicate with the bookkeeper, then what I'll do is I'll send a Loom video to kind of go over the things that are important to look out for. So next year, hopefully, they know what to look for before sending books over to a client. If something is like really out of whack, I want to work hand in hand with the bookkeeper just to, more or less educate them on the need for the books to be in a position that's workable for the tax return.
I really love that you do the Loom video. I think that that's a really nice way. And you had mentioned in our talk beforehand in our prep for this was that the main thing there is that you're just trying to make sure that they're not making the same mistakes next year, right? Like address it this year if you see them, and then that means that next year they'll be that much better at the work that they're doing.
Yeah, I think if you don't let bookkeepers know what they're doing wrong, they don't even know what they're doing wrong,
Yeah,
right? And so as tax preparers, it's best to receive books in the a workable condition of like just getting the tax return done. So if you don't educate them, you're never going to get books that are ready to prepare a tax return. So
totally.
and if it's a 3-minute Loom video to quickly go over the changes, that makes all the world a difference when, next year comes around and you need a good set of books.
I like that a lot. Andrea, I wanted to give a brief intro to Andrea before she introduces herself, an intro to the intro, which is that Andrea is actually an Ask a CPA member as well as being a tax pro on this call. And we're exploring the possibility of her offering, she does small group coaching for bookkeepers who are just starting out and maybe they've taken a course or something like that, but they've just gotten their first client, or they're about to get their first client, or they're just a few in. And she does some really effective, amazing small group coaching, and we're sort of exploring her bringing that to Ask a CPA as an add-on feature. And so we're especially excited to have her here today. And I want to make sure you know that if you have specific follow-up questions, that you can actually mention Andrea in Circle and it will get her attention. So Andrea, please. Thank you
Thank
for
you
being
for
here.
the intro to the intro.
Yeah.
I'm Andrea MacDonald. I own an accounting firm called Steadfast Bookkeeping. I also have CPA on call, which is my similar to Ask a CPA, except when it's small group coaching, our focus is on what I call newbie bookkeepers. So typically bookkeepers with less than a year of experience who maybe need some assistance with technical accounting. So my group is not about how to market your services. It's not about how to build a website or find new clients. It's about how to do accounting. And that was a thing that I didn't find out there, so I created it. At Steadfast Bookkeeping, we are a team. I have 9 staff and 2 contractors, so total of 12, including me. We are fully virtual. I've got team members in 5 states and 2 other countries. We serve small business clients in bookkeeping, tax advisory, tax preparation. So we're kind of a one-stop shop for the most part. And as we move forward, we are definitely trending toward working only with clients who want that full service relationship. So, like the others, I prefer to work collaboratively with bookkeepers. So when we are preparing the tax returns and our client works with another bookkeeper, I also don't just take the financials and plug them into a tax return. I actually review them. I look for accuracy. I look for issues. And when I find things, instead of like traditional, old school CPAs, instead of just doing journal entries and adjusting the books, I actually like to go back to the bookkeeper and talk through what I'm seeing to try to understand where their head was. They can understand where my head is, and we can try to come to a consensus. Sometimes, I'm an accountant first and a tax professional second. I've been doing accounting much longer than I've been doing tax. And for me, the books serve a purpose beyond just info for tax preparation. I like books to be useful for the client to make business decisions, and that doesn't always translate directly to the tax return. And so, the bookkeeper might have cost of goods sold in a service company. I understand why that doesn't translate directly to tax prep. And so I like to talk through stuff like that. So definitely a collaborative relationship when they're open to it. They're not always. But yeah, that's my preference.
Everybody in this group is open to it, but I get that not all bookkeepers are, although it surprises me. And I actually am curious to hear more about what that later on. We can maybe talk a little bit about what that looks like why and when they're not receptive to that. Can I ask, did you say how many tax returns a year you do
Oh, yeah.
approximately?
We've got about 120 or 130 bookkeeping clients and about 200 tax clients.
Okay.
So we're fairly small from a client count. We're pretty staff heavy for the small number of clients we have, but because we're offering that full service relationship, we're very hands-on. It takes a lot of staff to manage that level of engagement with our clients.
Sure. That makes sense. Thank you so much. I'm so glad you're here. Stephanie.
Hi.
Hi.
So I'm Stephanie Steinke, and I'm in North Dakota, which no one has ever heard of, in a town called Rugby. And I'm usually everyone's first North Dakotan.
You're my first. You're my first.
Aw.
Aw.
Anyway, I took over I guess we'd call it like a legacy tax and accounting firm. And so it's been my mission the last 10 years to absolutely revamp it from like the top to the bottom, because it was definitely old in style and maybe in clientele. But anyway, now we have 8 people across, I think, 4 states. Yeah, 4 states and 2 countries. And we're moving rapidly toward Andrea's style of full service, less clients. Most staff members are part-time. Like I'm full-time and a couple others, but most of us have children or are caregiving. And so I didn't really plan it that way, but that's just how it's shaken out. So something that we've really come to value is flexibility, and so anyway, we're rapidly moving to be completely remote, even though, I'm still in the old home office. But yeah, we've done around 500 tax returns, but I'm also chopping that list, as we move toward more consulting, and working more with like how to integrate AI into your business and like all the other business questions that clients usually have. We're wrapping that in and offering that as part of the package. But how we like to work with people, we're also getting rid of our own in-house accounting over the next year, which makes me very happy. So anyway, we're actively looking to basically only work with clients who have a bookkeeper. And then, the model that we're working towards is a quarterly meeting, so everyone who would come on board would get a quarterly meeting, and we would either meet like with the bookkeeper or the business owner, and just work through all that together. That way we don't get to tax season and have a giant nightmare where we're wondering what the heck happened and why are these books like this and what app should have I used and why is my Square syncing wrong and like all the things. So
Yeah, that's
anyway,
resonating big time with the people on this call.
yeah.
I know for sure. I would love to say something about Stephanie here. If y'all will remember, there was a session that we did together where I came in and I said, "Wow, one of my tax colleagues reached out to me and was like, 'Are y'all gonna have a certification? Because I will legit drop every single one of my accounting and bookkeeping clients if I could work, if I knew that I could work with bookkeepers who knew how to prepare tax ready books, I would legit give away all of my bookkeeping clients and just move toward this model that you were just describing. So she was the inspiration for the certification that we're going to work on next year. So thank you, Stephanie.
Still stands. I'll fire them all.
We're going to make it happen. We are going to make it happen. I am deeply and for real in conversations about what the next steps would look like there. So thank you all very much for being here. I want to talk first about why there's such a divide between tax pros and bookkeepers. And I'm going to start off this conversation, which is that I mean, it's deep-seated, and some of it has to do with ego. Some of it has to do with how very hard it is to become a CPA. It's a huge, huge, huge amount of work. Not everybody on this call is a CPA. Some of us are EAs and annual, what's it called? Registered tax annual AFSP.
Accounting season program.
Yes. Um, and uh, but it's interesting because even non-CPA tax pros often have this same kind of problem working with bookkeepers, even though they haven't necessarily been through 150 hours of credit schooling and a year and a half minimum of full-time prep for these insane exams and all of the barriers that we know that exist. Somehow that just like morphed into our entire industry. And I don't really know why. I still am a little confused about it myself, but I do have some theories. And one of them goes back to what Andrea was saying earlier. Many tax pros undervalue the use of actual financial reporting, right? To make real-time managerial decisions for your business. And that's something that bookkeepers really understand very, very, very well. So if when tax pros don't understand that value, it's very hard for them to see bookkeeping as anything other than a compliance function, which is why so many of them, they're hearing AI is going to take your job away and look at the competition that we're getting from Intuit, saying fire your tax preparer and we're going to do it internally. And they're feeling very threatened by that. Not cool that Intuit did that, but also I don't feel like that should be a threat to us because I feel like we should be offering something more than compliance work. And so a lot of them are struggling to shift to tax planning and advisory services and financial analysis and KPIs and the more value-added stuff. So I wanted to mention compilation software briefly. One of the things that I think I realized recently that lots of bookkeepers aren't aware of is that for years and years and years, tax pros have used what's called compilation software or write-up software. And what that means is they just get the statements for a year for the bank statements and whatever for a year for the client, and it goes into not actual real QBO or something similar, GL software with accounts receivable and accounts payable and all the bells and whistles, but instead it's really like a glorified spreadsheet where you're entering this data solely for the purpose of feeding out the other end a set of financial statements that you can use for tax preparation. And that's called write-up software. Sometimes you hear it called compilation software because preparers who are doing working for firms that are doing audits or reviews will sometimes do compilations as well, which is just like issuing the financial statements at the end of an audit or a review, but with zero assurance, with zero like we tested and looked to make sure that these things were actually being spent in a way that's consistent with something that would be deductible to a business. So you hear it referred to as both ways. And I had a situation many years ago where I was at I think an IRS tax forum, and I was in the exhibit hall, and a bunch of places were trying to sell write-up software or compilation software to me. And I was like, I really don't understand. Please educate me. Why would I need this? And they explained, well, you need this so you can prepare an accurate tax return. And I said, but I'm using QuickBooks, and QuickBooks Online had just recently come out, but you still had to have a different version that worked on a Mac versus a PC. And so it was not where it is today by any stretch of the imagination. Desktop was still much better. And I was saying, well, I just don't understand. We're already using accounting software. And they were like, well, yeah, but obviously the information that is in there isn't going to be accurate. And I was like, dear Lord, why would I put that much effort into keeping the books in this software if they're not going to be accurate? I want my clients to use the financial statements to make real-time business decisions. And I just got wide-eyed, gaping. It had literally never occurred to them. So that is the history. That's what we're up against. That's what the era that Stephanie was describing when she talks about having a legacy firm. That's the era that we're moving out of and into your financials actually having meaning throughout the course of the year and not just having to pull them all together to basically get an Excel document of financial statements that you can use for entry. So I wanted to make sure everybody knows about that history before we move forward on this conversation. Andrea and Katie, you guys had some thoughts about why this divide exists. I'd love to hear your perspective on it.
Yeah, I think, and this isn't news, right? If you've been in the tax industry or accounting industry, you know that historically we have undervalued our services, right? Just like Nancy mentioned. And it's common, especially for old school firms, to way underprice their tax services, which means they have probably way too many clients. So they don't have capacity to be collaborative with the bookkeepers handling their clients' books. They just don't have time. When you're trying to crank through 5,000 tax returns in a tax season because you're only charging $300 a return, you don't have the ability to be collaborative with anybody. You're just trying to survive the day, honestly. Katie probably knows a little bit about this, right?
Yeah. I actually left a firm that was very tax heavy, and we were way over capacity, and it leaves little room to work with bookkeepers and kind of teach them what is a good set of books versus not. And sometimes it's when you're in a firm like that, the preparer thinks it's just easier. Let me just get this done so I can move on to the next tax return, because there's such a high demand for returns to get through the process of start to finish. And so I think that's where tax firms miss out on, is educating bookkeepers, because in reality, I know bookkeepers feel like tax preparers don't like them, and then tax preparers feel like bookkeepers don't know what they're doing from time to time. Well, I think it's because there's this disconnect of, the tax preparer doesn't have the time to show why this is wrong or what needs to happen, because they're just cranking through tax returns. I mean,
And those,
go ahead. I was going to say, for instance, the firm that I left, we cranked out 1,800 tax returns, and there was a total of 10 staff, of which 2 were full-time admin. They did not do any tax preparation whatsoever. So you're taking 8 people that are cranking out bookkeeping and tax, and two of those also were bookkeeping only. So we have 1,800 tax returns that are essentially getting done by 4 people. It's very unrealistic.
Absolutely.
And
Sorry,
at the end of the
Andrea,
day, the client is the one who really suffers, right? The client is paying 2 professionals, a bookkeeper and a tax person, who aren't working together. And that same tax firm, if they don't have the capacity to be collaborative with the client, with the bookkeeper, they're probably also not reviewing tax returns with the clients. They're probably not recording a Loom video recap of the return or something, so the client has some explanation of what they're filing. And so at the end of the day, the client is they're the big loser in all of this. And that's
and I'm
never
going to
what
make
I
the
want.
argument, and I know there are many in our profession who will disagree with me wholeheartedly on that, but I will make the argument that I actually think that ideally this whole collaborative approach needs to be something that the client actually is responsible for. At the beginning of the engagement, the client, I did a podcast that I'm really, really proud of that I have shared in our resources in Circle, a podcast that is directed toward the small business owner, which y'all as bookkeepers can grab this and send it to your clients and say, here is why we think that you need to be the person who is um, letting us know that you expect us to collaborate as a team, because that is not traditionally what we have been told. And when you set that culture from the top and you lay out your expectations for us, you're the one at the end of the day, like Andrea was just saying, that it's going to benefit the most. So why not leave that responsibility, not leave it in their lap? Obviously, we want to be proactive, but I think that a lot of this can be avoided if from the very beginning the client knows that this is something that is going to benefit them, and therefore they need to be responsible for this conversation coming up in the first place.
Well, and if you're kind of struggling with how to differentiate yourself from other bookkeepers or other tax professionals, you can use that tack. As you're in your discovery meetings with potential clients, you can, in that meeting, educate that potential client that they should expect that collaboration. And that's what you bring to the table. That might be different than other people they've spoken with.
Okay, everybody put that on your websites right now. I love that idea very much. Like, this is something that sets you apart. This is something that makes you special. You wouldn't be an Ask a CPA in the first place, like if you didn't think that this were an important thing, right? So make sure that those who you want to be attracted to you to work with somebody who is collaborative, make sure that you are attracting them to you by advertising the fact that this is part of your company culture. Olivia, you had some thoughts about this as well, additional reasons.
Two points I really want to say, and one is I actually don't think a lot of old school firms have the skills to collaborate with the bookkeeper, because I don't actually even think that they know how to use QBO for things like AR, AP. I don't even think that they actually have people there who are getting into the nitty gritty of the details of actually using it the way that a full functioning company needs to use QBO to get good financials. And so they are like a little deer in the headlights and go, just send me the reports, send me the reports. Oh, I don't even want access to QBO. Or, oh, I don't know, somebody here, you should send the invite to them. I don't know. People who are at these old school firms who do taxes, they don't even know how to use it. So, or Xero, or really any, more modern software, or non-compilation write-up software.
And I will say, although I identify first as a bookkeeper and second as a tax preparer, I will say we will cram anything into an adjusting journal entry.
They're magic.
Lots
It's
of people,
awful.
yes.
Yeah,
It's
they do
awful.
it to AP and AR, and you're like,
Yeah.
what is this?
Yeah.
Hello,
Exactly.
everything's out of whack.
It's
Yeah.
rough. It's rough.
The second point that I really want to make is that I have noticed that sometimes clients are bullies and they want to do weird stuff in their books, and the accountant is too afraid to push back or doesn't feel like pushing back. And so what they do is distance themselves from the bookkeeper in order to provide like this protection against the tax return that gets prepared from the books that the client bullied the bookkeeper into including all these crazy things in there. And so this accountant firm goes, oh no, just send us the P&L, and never like looks in office supplies to, they know damn well it's not okay, but they want to create like this false protection for themselves.
Well, and
But
can we talk for a second about why that,
collaborating or asking questions or anything?
can we talk for a second about why that is false protection? Because I'm not sure if all of the people who are watching this recording understand what Circular 230 means for us as tax preparers. So can you briefly?
I would definitely say you can go ahead, but it is false protection, but they still have an idea in their mind that they're protecting themselves against this like erroneous set of books that the client has bullied the bookkeeper into.
Yeah. Stephanie, do you want to briefly explain what we're supposed to be doing as bookkeepers under Circular 230 and why this distancing really is false? I know I'm sort of springing this on you, but
Yeah, well, at the end of the day, when they sign that 8879, right, they are saying that what is
the
in that
8879
return,
is the signature form, the e-signature form.
yep, the signature page on the tax return where they're signing it, right? We do it digitally now, but it's still them signing the return, right? But they're still signing off that everything in there is like true and correct to their knowledge. And it doesn't really matter whether it's the bookkeeper or they did their own books or the tax professional, they are on the hook for perjury, right? Under IRS rules and law and all that, that their return is correct.
And
So,
if they're not required, and here's what tax pros lean on to frequently and bookkeepers by learning this is something that you can take back to the tax pro and say, I'm worried for you. I am concerned on your behalf. I literally just had a meeting this morning with an Ask a CPA member where they were talking about some home office and vehicle expense deductions that I was like, I wouldn't sign that return, right? And I said to this bookkeeper, I think you need to go back to the EA and say, I'm concerned on your behalf that these shouldn't even go into the books in the first place. Are you sure that you feel okay about this? Because the rule in Circular 230, which governs us as tax pros, is that you don't have to audit the books. You don't have to audit your client, but you can't ignore information that should make you want to ask questions.
yeah,
And
asking a
that is
reasonable question when you see
yeah.
something funny.
And I think that that's a very, very gray line, and a lot of folks end up in a situation where they are leaning way too heavily on the it's not my responsibility to audit the books. And as Olivia was saying, you might want to distance yourself from those books by saying, I don't know anything. I didn't see anything. I don't have to ask questions. And I think they're doing a disservice to themselves as well as to their clients. All right, so moving on to the next question. What sets a good bookkeeper that you want to work with apart from a mediocre or poor bookkeeper that you dread working with, especially as it relates to year-end tax filing? Katie, I'd love to hear you start us off on this. You're muted.
Yes, so sorry.
It's okay.
Yes, and I actually think, Jonah, this might answer some of your questions that are going on in the chat. So for me personally, what sets obviously a good bookkeeper apart from a not so great bookkeeper is their willingness to learn. And, you're asking about, what if they have different packages and the client selects a package where you can't necessarily communicate with the tax pro. I think that's something that has to be asked up front. And I think a good tax pro will teach a bookkeeper, things that they need to know to become better at their job. Because for us tax pros, receiving a great set of books makes all the difference in the world, not only for our job, but then it allows us to see that man, this is a great bookkeeper and we can refer business to you, right? Because for instance, I know what my capacity is. I know I will probably get more than, the 20 monthly recurring clients I want each month. I know it because I literally have a new email every day with inquiries of services. Well, if I know a good bookkeeper that produces great books, I'm going to refer my clients to these people because I know what they're going to get is a great thing. Now, I have also worked with bookkeepers who are poor bookkeepers that don't want to learn. They don't want to put any effort into the books. They're literally just dumping in what they've been given from the client without asking questions. And I think questions are the most important thing. You can never go wrong with asking questions. I know sometimes tax preparers might feel like you might feel like from them that you're inconveniencing them. But at the end of the day, I'd much rather have a bookkeeper ask me several questions about how to classify something or what to do with this versus just make an assumption and it just get thrown into the book somewhere else. And that's for me the kind of relationship I like to have. Again, the collaborative relationship where you can come to me and ask questions. I'm not going to charge my client all these questions because at the end of the day, you and I working together actually, gives the client the best experience that they can have, right? We have a great working relationship. The client has a great working relationship with their bookkeeper, and we just make one great, big, awesome team.
There's a phrase that I learned from Nicole Davis that this type of putting this extra work that you think you want to charge the client for, that the tax pro thinks they want to charge the client for, because they think that this costs them. But in fact, it doesn't cost you, it pays. Because an hour during tax season is worth like 3 or 4 hours outside of tax season. It's just taxes are so hard and there is so much work that goes into it. And you are so pressed for the time. And everybody here has talked about the fact that everybody's over capacity and it's too much and it's so hard. If you as the tax pro can spend time outside of tax season educating, then, Joanna, you talk about what about this service package? What they paid for was only tax filing and nothing more. Maybe you, as the bookkeeper, can go to that tax pro and say, look, I know that the client has only paid for this. However, in order to make your life better during tax season, you really want to work with me, and maybe together we can go to the client and get the service package adjusted to compensate you. Because as Andrea was talking about earlier, they're undercharging. They're undercharging, chances are, for the tax returns in the first place. So maybe you can help them learn how to wrap this up into something that they're charging for throughout the course of the year. And even if they're not, to Katie's point, it's going to help them during tax season. And that's when you want an extra hour of time more than you want an extra hour of time during the off season. This is related to some questions we're getting in chat. Is it actually the tax preparer's role to educate the bookkeeper? I would love to hear, Andrea. I can see your face. You wanna answer that one.
I don't think it's the tax professional's job to do it, but like you just pointed out, it's going to save them time during tax season if they invest a little bit of time before tax season. So, for me, it's helpful for bookkeepers to understand when tax season is, when our peaks are. If you reach out to me on April 13th, we are not going to have time to chat. But if you're reaching out to me on November 20th, we're past all of the tax filing deadlines. I've got this month of kind of dead space while I'm prepping for the next season. That might be a great time to sit down and talk through all of our joint clients and figure out what we can work on. So some of it is knowing, it's like if the ADP rep walks into your office on tax day, never going to work with ADP, right? It's knowing your audience, figuring out when is a good time to reach out, and maybe just selling it. Like, I want to make your tax season better. Even if it doesn't result in changing how they structure their fees, maybe spending an hour together, you tell me the things that you're having to keep adjusting, and I can adjust how I'm doing the books, if it makes sense.
Absolutely.
But I don't think it's necessarily the tax pro's job.
Joanna also makes the good point in chat that you'd have to do it very carefully if you're trying to help them, increase their fees so that it doesn't look like you're teaming up to get more money out of them. One thing that you could do, this is a lot easier with new clients than it is with established clients, but you can say to the client, part of what I take pride in is that I'm collaborative with the tax pro. Not all tax pros love this, because it means that, yes, they're going to have to spend more time throughout the course of the year. But at the end of the day, I truly believe that this helps the client and this helps the tax pro as well as me. And we all have the same common goals here. So talk to the client about, somebody asked me just yesterday, how can you find out, how can you suss out whether that tax pro is going to be willing to be collaborative with you or not when you're talking to a new client? Ask the client what their relationship with the tax pro is. Do they talk to that tax pro throughout the course of the year, or is it really just once a year compliance? Do they feel comfortable going to their tax pro with questions? Does the tax pro review their tax return with them before they're filing it? Like, ask them ask the client questions. And ultimately, as y'all know, who are members of Ask a CPA, I get a copy as the bookkeeper of that prior year. I get the past 3 years of tax returns, but at least that prior year, do I feel like does it match the books? Right? Like, is the tax preparer doing a good job or are they phoning it in? Is the tax pro even in the QBO file as an accountant, or are they just getting PDFs? You can ask your client these questions, and it might be a reason to say, no, I'm sorry, potential client, I don't think we'll be a good fit. Working with your tax pro is just too much a part of what's important to us. And I suspect that your tax pro isn't somebody that we're going to want to work with. And then you have the opportunity for the client to say, or the potential client to say, well, I'm not happy with my tax pro either for all of these reasons. Do you have somebody I can go to? And then you've potentially gotten a really good client and they can work with your preferred tax professional that you're already referring business to. So there are a lot of ways that can be done without it just being, hey, I'm going to help you raise your fees, wink, wink, right? There are a lot of other ways that can be done.
I do want to add real quick though, and as a tax professional for 11 years, I've seen this more times than I can count. I can't tell you how many potential clients have come to me complaining about their relationship with their current provider, but then they expect me to quote the same or less. So they want more services for the same money or less money. Like, my last guy only charged me $300. Why are you $1,200? Well, I'm $1,200 because you're going to get 2 meetings during the off season as well, on top of tax prep and unlimited support via email, right? Like, a lot of times, not all the time, some of the times the client is really the problem. And so be looking for those red flags as well, because that could be a really clear indicator that this is not a client you want to work with. It could be that they have a tax professional who does offer that level of service and they've opted out because of money. So it's not always the tax professional, but by and far, there are a huge number of tax practices out there that are underpriced, over capacity, and just not interested in doing anything other than basic tax prep.
Right, right. So going back to the question of what sets a good bookkeeper apart from a poor one, Dawn is asking, what are the items you feel the bookkeeper should be doing or what they're lacking education on? So not just the bookkeeper who's new, but like what a good bookkeeper, what sets them apart? Obviously being collaborative, but what are the items you feel that they're lacking education on? And this will, I hope, dovetail sort of nicely into our next official question on here, which are, what are the nuanced deductions you'd like bookkeepers to separate in the P&L and the balance sheet to avoid having the CPA drill down further? These are related. So Andrea, you're going to be handling that next question, but I'd love for you to sort of speak to it from the angle of items where you feel the bookkeeper's lacking education.
Yeah, and I'm excited for the other pros on this call to weigh in too, because a lot of this are not hard and fast rules. That's, I think, one of the most challenging parts about being a bookkeeper and trying to have books ready for a tax professional, because you ask 5 tax professionals where they park a certain expense and you might get 5 different answers because there aren't necessarily hard and fast rules. Not every expense on a tax return has a hard-coded line. So I think you, as a bookkeeper, you don't have to be a tax expert, but you should have some basic familiarity. And we're going to talk a little bit about that later. You should have some basic familiarity with some of the tax schedules. And here's an example of what I would call a bad bookkeeper. I had a client referred to me by a local bookkeeper. As I'm looking through the financials to work on my first S Corp return for this client, he's a tattoo shop owner. I saw about $125,000 in leasehold improvements on the P&L. First of all, if they're legitimate leasehold improvements, they don't belong on the P&L. But when I dug in further, the client said, oh, those are repairs on my personal residence. Why were those in the books at all? Like, that bookkeeper should have pushed back. And her response was, well, that's where he told me to put it. So that's, to me, a bad bookkeeper, right? You should have some professional skepticism. Even if you don't necessarily understand where exactly it goes on a tax return, you should be asking some additional questions. So for me, things I like to see broken out in books, whether I'm doing the books or somebody else, is officer salaries. So if the company is an S corporation, the wages for the S corp shareholders get reported in a separate place on the S corp return. So I like to see that broken out. Can I get to it otherwise? Sure. I'm still going to tie it back to payroll reports, but I'd like to see it separated. Shareholder medical, if it's an S corporation, again, and the company pays the shareholders medical insurance, that gets added to the shareholders W-2. I kind of like to see that broken out as a sub account to officers' wages, because then I can make sure the W-2 was updated correctly without having to do a whole bunch of digging. Estimated tax payments. I don't think they should be made through the business account at all, but a lot of taxpayers do it. So
I do.
I like to see estimated tax payments. They don't belong on the P&L at all, but I like to see them as a sub account to distributions on the balance sheet so that when I'm doing the tax return, I don't miss an estimated tax payment. I make sure I'm reporting all of the payments that were made, because clients might forget, or they might just assume since I have access to the books, I'll know where to look.
And Andrea, by the way, I just want to add to this. During the pandemic, we started requiring all clients to provide an account transcript before we do their return, and that does list the estimated tax payments, and that has made it has reduced probably by half the number of CP notices we're getting from the IRS. And I have an MSN article that I would be happy to share with you, which is a public-facing article that says, "Hey, small business owner or client or whatever, here is how to pull it step by step." And I encourage people to send that article out to your clients and say, we're starting this year, we're requiring everybody to provide this to us. And so I'm writing a little note to send that to you so you can send it to clients, and then you don't have to worry about this as much as we used to have to worry about it.
Well, and just remember back to that, like, how do you differentiate yourself from all the other bookkeepers? If you're proactively at the end of the year reaching out to your clients and saying, hey, don't forget to pull an account transcript and send that to your tax professional. Wow. Right? Like that's a differentiator.
Yeah.
Accountable plan reimbursements, like mileage reimbursements, home office reimbursements, if those are being logged in the books. Like for us, that's part of our year-end bookkeeping, is recording those things, even if they're really just a tax item, because we want the books to be ready for our internal tax team. If we're recording those things, I like to see them reported separately from travel expenses or from rent, right? Office rent.
Can I ask you a question about that?
Yeah.
So we like for those things to be separate as well, but I would say it's really inconsistent from client to client. And to clarify for the folks who are listening to this call, accountable plan, when we talk about an accountable plan, that's usually S Corp related because they can't have the business pay for their home office, right? They have to be reimbursed under a written accountable plan. There are other types of entities that use these, but that's where we see them most commonly. How are you, when you say you like this to be separated on the P&L, are you like accountable plan dash home office? Is that a line on your chart of accounts? What does it say, and how would I as a tax preparer know what that is? Quite obviously, when I'm trying to do the return, if I'm not responsible for having done the books.
It's a little inconsistent, I'm not going to lie. So we're working on standardizing that. For me, especially if I'm sending books outside to a different tax preparer, I'm a big fan of accounts and sub accounts. It drives some tax professionals crazy, but I like to have good, clear, concise information. And so in my perfect world, it'll literally say accountable plan reimbursements, sub account mileage reimbursement, home office reimbursement. And just to add a little bit of color to what Nancy said, the accountable plan is important for an S Corp shareholder, because if, say, mileage is reimbursed under an accountable plan, it's a tax deduction for the business and it's not taxable income to the shareholder. That's really important. That's a huge tax advantage. So if you were just paying $400 a month, we'll say a flat $400 a month, that's going to be taxable income because it's not tied to any specific number of miles or mileage reimbursement rate. But if you're reimbursing actual miles, it's a deduction for the business and not taxable to the individual. So I like to see that broken out to make sure I don't miss it, because it can, if like for me, I don't do a whole lot of driving. I own a virtual accounting firm, right? I might run to the post office occasionally. But for clients that do a lot of business driving in their personal vehicles, like I have a client who's a paint contractor and he's the owner, so he uses his personal vehicle to drive to sites. That's a huge deduction for him. That's a huge amount of reimbursement. I don't want to miss out on that because it just got buried somewhere or wasn't recorded properly.
So for me, I would, and this is, I love this kind of conversation because I feel like this is illustrating to our attendees or anybody watching this recording that there's more than one valid way of doing this. This is not, Andrea is a great tax preparer and I'm not a great tax preparer because we do this differently, but I would not put accountable plan and then sub accounts for the different types of things because I want the client to look at their transportation line item and have a sub account on there for mileage reimbursement under an accountable plan because I want the mileage reimbursement to be in transportation, but I do want it to be separate from the other stuff. Same with home office versus rent. I would want this to be in the cost of occupancy. So under occupancy expense, we might have rent, and then we would also have home office under accountable plan because there are situations where you can have both. So I love the way that Andrea is doing it, but when we're doing it, we would not do it that way. And this is the point I'm trying to make here. Those are both completely valid. There really aren't standards for this. So vehicle expense and home office, I feel like are the two that are most different from, and probably estimated taxes, which you touched on too, are most different from preparer to preparer to preparer. For the rest of our panel, do you have any other ones besides those three, estimated taxes, vehicle expense, and home office, that you like to see done a particular way that maybe isn't necessarily a standard?
I just want to jump in quick. I mean, I'll give you one, but I just want to jump in. So back in the chat, when I answered like, yes, I think it's the tax preparer's responsibility. Because look, like just the conversation we just had, if you're not teaching them and we're doing it different ways, how are they going to know? So anyway,
such a great point, Stephanie. That's gold. Can you please repeat that?
Yeah, I was just saying, especially in the last year, the more we've had these conversations, if we are not teaching our clients how we want it, and there's plenty of different correct ways to do it, how do they know? And I'll even go farther. If we're not teaching them and they have the question, they're going to find the answer somewhere else. They're going to go on YouTube. They're going to go on TikTok. They're going to go to the guy down the street. Oh, they're going to go to Perplexity and ChatGPT. Absolutely. So if we're not providing that, they're just going to get it somewhere else.
Absolutely.
So I actually do think it is our responsibility. Do I think I have to teach the whole world? No. But my own clients, yeah, I do.
Yeah, absolutely. That's excellent.
Also, just piggyback off of that, like that's collaborative as well. There's an element of that that's like the reason we want to do it this way is so you, the client, can look at your auto expense and know overall how much it is. Like there's a whole piece that ties it into the client actually being able to utilize their own data to know things. That's not just only because I want it done this way or only because the bookkeeper wants it done this way, but like a further, more holistic goal of like, now we all understand why we picked this because we have a plan. We're collaborating, we're understanding this together,
Absolutely. There was a question in chat that I'm realizing, Erin, I would love to, I'm going to take this question of yours and I'm going to dive deeper into it in Circle. But Erin mentions that there are some client tax preparers that she works with who, for whatever reason, are not in QBO. Now, personally, that would be a no way. For me, I would not take those clients because it says something about that tax preparer that I don't like. But I know it happens. So she says she includes transaction reports for fixed assets and owner/shareholder equity accounts. Any other transaction reports I should be sending? And Katie said she asks for the complete GL detail on for any client that's not like where she, for whatever reason, doesn't have access. She would ask for the complete GL detail, and I agree. However, we do have a list of things as tax preparers. We have a list of transaction detail reports that we do export with our work papers when we're doing the tax return. Fixed assets, owner shareholder equity accounts are on there, but there are a bunch of other ones. And I'm like, what are the other ones we export? And so I want to go back and look at my work papers and provide a list in Circle to you of these are the things that we are exporting. Olivia mentions the tax detail, and I agree. The state and local tax detail can be really important because that gets treated differently depending on what kind of entity it is. Joanna says, would the GL not include all of that? The GL would include all of that. It's just that when we're internally doing work papers, we're not going to export the entire GL. Like that would be overkill. So I'm just talking about, yes, the GL would have all of that. And if you have somebody you're working with externally, give them the entire GL transaction detail. But in Circle, I am going to also provide a list of here is what we export the detail for when we are doing our own work papers, because I do think that those are probably the ones that most tax pros would zero in on. So, all right, are there any other, anybody else have examples of things where it should be separated, nuanced deductions that you'd like bookkeepers to separate in the P&L? I know for us, anything that's non-deductible, we make a separate line that
Yep.
says non-deductible after it. That is one of
Same.
the things that we always do.
I also like, especially for asset heavy clients, I create an expense account that is just called assets less than $2,500.
We do too.
Because that account, you know, you could have office equipment on the P&L legitimately, and it could be $12,000, but it was a whole bunch of purchases that were $500 each. So I like to just, then I know that yes, the bookkeeper was aware that anything over 2,500 should be a fixed asset on the balance sheet. And I know that I can trust what's in that, you know, that $12,000 balance is legit.
And to that point, if for the Ask a CPA folks who have downloaded the Dancing Accountant guide to year-end reviews, it's the checklist for year-end reviews. Checking the capitalization threshold for each of your clients is on there because although you can go up to 2,500, we work with really tiny clients for whom 2,500 is way too much. And so we actually have 1,500 set as the capitalization threshold, and we do have assigned, it is in the bookkeepers, when they are going through the annual review, it says check to make sure we have assigned capitalization policy for this client. They look where it should be. If it's not there, they send a template to the client and say, hey, we need a signed copy of this, please. They are allowed, the client is allowed to change that up or down from 1,500, but most of them stick with 1,500. So we do the same exact thing as Andrea, where in parentheses, it'll say equipment under 1,500 or equipment over 1,500. And the equipment over 1,500 is a balance sheet account. And the equipment under 1,500 is a P&L account. This is very fun for me to hear how other folks are doing that. Dawn's asking if that's a sub account under office supplies. Not for me, but it could be. It's
Not for me
absolutely
either, but could be.
you absolutely could put it there. That would be completely valid. Meals we put in at 50%, but we also have a separate line for firm function at 100%. So we're being very clear about the fact that there may be meals in firm function, but they follow the rules for employee recreation as opposed to following the rules for meals. Sandy, you are raising your hand. Is that something you can drop in chat, or is it complex enough you need to unmute?
Oh, I can put it in chat if you prefer.
Okay,
Yeah.
that would be great. That would be great, just so we can, because we only got about half an hour left. I want to make sure we're getting to all of the questions. Erin asks if the tax preparer should create the capitalization policy, or can I? You can absolutely. You can. That's like reasonable compensation. Capitalization policy is not something that you have to be a tax preparer to create. As a matter of fact, most tax preparers don't. It's just true. We don't. I didn't for years. I think it was only about 3 years ago or something like that we started realizing. I was like, geez, those are supposed to be written. Accountable plans, written. Reasonable compensation, written, right? Like there are a lot of things that need to be written that we are not doing. But yeah, you can save your tax preparer's butt by doing some of this. Sandy's asking, how do we differentiate between 1,500 or 2,500? I always ask new clients what their policy is and they never know. You know, that is a thing. We're deciding on 1,500 because my personal experience looking at clients' books is that they do have things that when they dispose of it, they are usually replacing it. And I, as the tax preparer, want to make sure that that's going to be on my asset list. I think that I am in major minority in using 1,500 instead of 2,500 because it does make life harder for us. Olivia, do you have thoughts about that? Or Stephanie, anybody who'd like to?
guys.
What?
I was gonna say that I do the $2,500 rule, not 1,500.
Stephanie, you too?
Yeah, starting in 2014, when those de minimis rules came in, we started having people sign the 2,500.
Yeah.
Okay.
And they roll their eyes and look at me like I'm crazy when I ask what their capitalization policy is, because they think they're such a small business, they don't need to have one.
Yeah, it turns
I'm
out
not
everybody.
surprised to hear
I will
people
tell you, if
don't
you send a
have one.
balance sheet to a tax professional that has a bunch of assets for like $575, they are not going to like you. That is one way to really make the tax pro mad.
So does everybody remember this thing that always sits up here? It's my tax Twitter retreat Jeopardy board that is covered with Post-it notes about what tax pros. I refer to this in a lot of our Ask a CPA sessions. Andrea, you were there, so you actually saw my presentation with the actual Jeopardy board up on the screen. Well, this one, there are at least 3 Post-it notes that say don't capitalize things that are underneath the capitalization threshold. That really pisses tax pros off. Don't do that. So, okay, I'm in the minority for sure.
I do want to say
1,500.
one thing on this topic, which is
Yeah.
like in California, we have personal property tax. So for whatever county you're in, you have to say like, here's all my assets. And it gets down into the minutia. They literally ask you to tell them how much the supplies are that you have on hand. So
Wow.
depending on your location, sometimes I don't still put them on a depreciation schedule, but to your point of like assets under $2,500, you have to go to that list and pull out all these fiddly little things because if
Same
you're
with
on
Indiana.
it, they'll get you.
Virginia too.
Oh, okay. That's interesting. Indiana, Virginia, and California. Is that where you said? Yeah.
North Carolina,
North Carolina.
Washington.
Huh.
Places in
Wow.
Washington.
Washington.
Lots of places.
So this is
Nevada.
amazing. So there's a Nevada. Gosh, this is like, do you guys think this is like maybe half the states, a third of the states are doing this? That's amazing.
Probably.
All right, so let's move on. Andrea, this is a question for you as well. What are some of the most common forms and schedules that bookkeepers should know about? Actually, I think that this is a question from Sarah Lurcher, just because this sounds like her. The parentheses after this say, when CPAs start talking about them, all I hear is the teacher from Charlie Brown going, "Ruh, ruh, 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 ruh," and I try to nod intelligently while sneak Googling what is on a Schedule X off camera.
Yeah, this is kind of a tough question because it really depends on how the taxpayer is taxed, right? So if they're a sole proprietor, a single member LLC versus an S corporation versus a partnership. But if we just focus on that single member LLC, like the really small business client, probably the most important schedule if you're doing bookkeeping is Schedule C. That is profit or loss from a business. So that is the P&L in tax form. They don't translate one for one because, we can create expense and income accounts for whatever. But Schedule C is literally called profit or loss from business. So that'll be an important one to familiarize yourself with. That form stays pretty consistent. So the main tax forms change typically year to year, but the Schedule C stays pretty consistent. If you are a bookkeeper who does bookkeeping for companies that own rental properties, you should familiarize yourself with Schedule E, which is where rental property income and expenses are reported. Kind of take a look. You might want to set your categories up, your accounts in your chart of accounts to more closely mirror that, like cleaning and maintenance versus repairs. It's reported like cleaning and maintenance are reported together on the tax return. For me, normally repair and maintenance in the books are together, but for tax purposes, that's 2 different things.
And we always put cleaning in the repairs and maintenance account because that's how it is on most of the tax returns. I'm going to interrupt for just a second to say that I know we've mentioned this quite a few times in Ask a CPA sessions, but I don't think that this can be, I don't think I can say it enough, which is when you are designing the chart of accounts for your client, pull up the tax return. Pull up, if they already have a tax return that's been prepared in the past, pull that one up. If not, pull up a blank one for their entity type and start there, because you do not need a chart of accounts line for everything that's on that return, but for any of those fields on the return that do apply to that client, you need a line to be separate for each one of those. You will upset the tax pro. and you will do a disservice to everybody involved if you don't have at least a line for each one of those things. And in a call I was having earlier today, there's a client that has very, very, very few expenses. And I was like, you know what? And they're S corps. And I was like, pull up the 1120S, look at all of the things. Which of these things actually apply for this client? That person's chart of accounts can literally be 5 lines. Not their chart of accounts, but their P&L can be only 5 lines long, honestly, right? So make sure, though, that you are pulling that up when you are designing the chart of accounts. It will help everybody because, unfortunately, they are not the same. The Schedule E and the Schedule C and all of the other forms that Andrea is about to talk about are not the same. I wish they were.
And the flip side to that is, if you follow the standard, like the pre-filled in QBO chart of accounts, you're going to have 7 sub-accounts for office expenses. There's 1 line on the tax return. So unless your client finds value in knowing office supplies, photocopying, like unless they find value in breaking their office
Printing and
expenses out,
reproduction. Oh
Yeah.
my God, it
like you
drives
don't
me
have
nuts.
to do that.
Postage. Ugh, I
Yeah.
hate.
So familiarize yourself, especially with, I think, the Schedule C. If you are in a high agriculture area and you work with a lot of farmers, Schedule F for farm, take a look at that and how
Now,
everything is broken out.
Stephanie, you work with a ton of farmers, right?
Mm-hmm.
What is your
We're a lot of farms.
What's your percentage of Schedule F?
That's a good question because I'm letting more and more of them go because they're so damn stubborn and I'm over it. But when they're good, they're really good. So
Okay.
if somehow
Perfect.
someone finds their way into this recording, I still love you. But I kind of organize my farm chart of accounts a little different, but the point remains, everything you see on the Schedule F is directly on the chart of accounts that we use.
Right. You can have additional things on your chart of accounts, but you need to at least have 1 line for each of the ones on the tax return that they're going to be filling out. So Andrea, sorry, going back to you.
Those are the main 3 for me. Those are the ones I think that most closely relate to bookkeeping. There are some additional schedules like itemized deductions. That's typically not going to be found in the books. Schedule B is interest and dividends. Those typically aren't going to be found in the books. So I would stick with C, E, and F.
And so I would add to that is everybody needs to I think everybody who's got a home office client needs to be looking at the form that is home office, which is what's the form?
8825?
8829.
8829.
Yeah.
8829. You don't need to remember the numbers for these. That is no longer the badge of honor that once was.
That's like the only form number I know.
I bet you know depreciation.
4562? 4562, I think.
I can't remember it.
I don't memorize, but I can
used to.
Google, y'all. I just
I
don't.
used to.
You are
I've
correct.
got limited space.
You're correct. Okay, good. It sounded right to me. So I do think that the home office one, if your client has a home office, something you should be looking at because there are very specific lines on that.
That's a good point. Back to what to see broken out. On the tax return related to the home office, there's 2 types of expenses. There's expenses for the whole home, and then there's expenses specifically for the home office space. And they get treated differently on the tax return. So for example, if I paint my whole house, that goes in one place, but if I buy paint just for my home office, that goes in a different place. You can write off more of the costs that are specifically for your home office. So if you have a client who does a lot of stuff like that, like they're renovating, maybe ask them if they have the detail for what they spent on the home office specifically, because you can break that out. Whether you need to do that in the books, I would say it depends how much it is. But if it's decent enough, right? Like maybe they replaced the carpeting specifically in the home office or the flooring or built-in shelves or whatever, you're going to want to track that separately in the P&L so the tax preparer puts it in the right spot on that 8829.
And at the very, very, very least, please note it in the memo.
Yeah.
We sometimes forget that memos they can be used to jog our memory later on, but they can also be used for communication with the other people who are going to potentially be in that file. And even if you are printing out the GL transaction detail, you can print it out with the memo, right? So it's one of the reasons that we put the memo and copy it and we put it in the description so that it shows the same thing shows up on different reports. It depends whether it's a line item or a transaction level note. And so that's just one of the things that we often do. I kind of have that keyboard shortcut for copying and pasting stuck in my hand like this. I can go like this and know what it is because the memos and the descriptions can be extremely, extremely helpful. Does anybody want to briefly touch on some of the forms for other types of entities?
Let's talk about partnerships because those are the worst.
I hate
Worst.
partnerships.
I hate
I
partnerships.
mean, I actually love them, but still
hate them.
the worst. I think we should talk about, that goes back to saying, please put in the health insurance as a separate line. Please put in the partner retirement as a separate line in the chart of accounts. Because if you go look at a partnership return, we start getting into guaranteed payments, and guaranteed payments are special things that are either just direct payments to the partners or health insurance, retirement plan contributions for that partner.
They are treated
Kind of
very
I
differently
see a
than
lot of
S corps.
life insurance, disability insurance policies. So disability and life insurance are treated differently when they're for the partners versus the employees, and actually that's true in S
For S
corps
corps as well.
So I think that is a whole kind of little world of its own. Look at the 1065, look at the front page, and then probably get a little bit familiar with what are these separate items that the partners need to report. Even if it's health insurance and they have employees and the employees have health insurance, we still need to know just the partner's health insurance. So that gets a little bit gross, unfortunately. So I think looking at 1065 is important.
Sandy, I think that we should do a whole session on guaranteed payments. I think that they're very, very confusing. I hate working with partnerships, and as a matter of fact, we're transitioning out of it. And we're not firing our existing partnerships, but I am as we accept new clients, we will not accept folks who want to be partnerships. It's problematic for lots of reasons, and I actually think most of the time it doesn't serve the client. Any other forms we want to make sure we're covering? We talked about depreciation. We talked about home office. I feel like we've hit most of them. All right. If there are others, we can toss them in circle after the fact. So this is a question we got in chat, and we got it submitted as a circle question as well. Olivia, I'm going to have you take this one. When doing a cleanup and you find significant issues from a closed tax year, how do CPAs want to see it on the books? An adjustment to retained earnings, something somewhere else on the BS, which I have to sometimes think you see that as BS on the BS. A current expense or income, sometimes the issues may be large enough to consider an amendment, or is it preferred to always include it in the current year? It's a complex question. We're only going to spend a few minutes on it, but
some amount of collaboration that has to take place. Like I found a $50,000 mistake is a lot different than I found a $500 mistake. And I'm just gonna say, if you find a $500 mistake, throw that into this year. Don't do weird stuff. Don't put it in last year. Don't adjust the retained earnings. Just, oops, this computer expense that I expensed last year, it didn't actually clear the account. Something weird happened. It was a bank transfer. Instead, just fix it in the current year, like on 1/1, and make a note in there, and then we'll all know why there's a $500 expense that was really for last year and this
and
year.
in those situations, we actually generally will put adjustments that are for a prior year into other income or other expense. That is how we handle it.
I do have an account for bigger things that are weird, or people who are really looking at their year-over-year costs. Like a lot of times what happens is it's like insurance. Insurance is a big place because maybe you get a workers' comp audit, and now all of a sudden you didn't know you had a $30,000 bill until this year. If I had known last year, I would have accrued it last year, but I didn't. So a lot of times I'll put something like that into prior year expense because I don't want you to look at your P&L and go, why is my workers' comp so big this year. And
That's exactly it. That's why we put it in other income or expenses. That is that to go back to the very first thing we said in this whole session, is that these books should be used to make real-time managerial decisions. And when you've got prior year adjustments sitting mixed in with all of the other P&L accounts, it reduces it reduces the usefulness of the financial statements.
I agree. I do think there's a threshold though. If
Yeah.
it's a couple $100, like this is just not the hill to die on, in my opinion. I'm just putting that
I probably wouldn't even, if it were under $500, maybe even under $1,000, I'm not even sure I would mention it to the tax preparer. I would just stick it
right.
in other
Yes.
expense for this year and not, my threshold for actually mentioning it to our internal tax preparer, it would have to be probably $1,500,
I
$2,500.
would agree with that. I would
Yeah.
say about that number. Yeah. And then
Now, I need to clarify, the IRS doesn't have a threshold. From the
no.
IRS, if you look at the IRS rules, there's nothing saying, oh, well, if it's only $500, don't worry about it. Technically, you should be filing an amended return for freaking everything if you're following the rules to a T. But honestly, in real life, under audit, the IRS will be fine with these small adjustments.
Yeah, I
It's
think the
the
application of that rule is as long as you're reporting it in the year the error was found. So if you found the error in 24, even though it affected 23, you can fix it in 24. But like we said, if it's $100,000, then yeah, you're going to want to go back and amend the
Right.
return.
That's a
And
pretty serious misstatement of, there's basically like a 25% threshold on understatement or of income. So if you are outside of this overall threshold, you definitely need to go back to prior year. And then as far as that adjustment, that don't get weird. This is my opinion, but like I really dislike it when people do like 4 different journal entries to make something fit into to make a prior year adjustment. Like just go back, put the bill in the place that it should have been, and then tell the tax preparer, hey, you actually have to go revise last year's return because I had to go fix this thing. Don't get weird about it and
you
put
mean when you're when you're like already on the same page that you're going to file an amended return? Yes. Okay. I just want to make that clear. If you are going to record that in the current year, don't go change last year's books. Please don't ever change last year's. But once you're on the same page with the tax pro that you are going to be amending, just fix the books. We've got, especially if you're in like QBO, there's an audit trail. We know it's okay. We already exported work papers first time around. Now we're going to export the new work papers. It's fine.
That is a great time to reach out to the tax pro. Like, hey, I found this thing. Would you rather I fix it in 23 and you amend, or should I put it in 24 and take that direction from the tax professional?
Absolutely. Next question is, what are work papers? I know that it's backup documentation, but not how it's generated and tracked. Are they official documentation forms to fill out? I wish. It would be really nice if we had a standard for that. Is it just a list of all the work you've done on a file? What are work papers? Katie, take it away.
So the way I use work papers is I use whatever documentation you have to track balances, particularly on the balance sheet, accounts on the balance sheet, and then payroll. So for instance, work papers that I commonly use are bank statements, reconciliation reports, depreciation schedules, payable reports, loan statements with ending loan balances, detail on distributions, because if you're not breaking out expenses and you have some anomalies inside of distributions, I want you to point this out. And then I also have payroll reports, so that we can tie out wages and payroll taxes at the end of the year. Those are like the most commonly ones that I use. Sometimes there's exceptions where I'll want backup for certain things. If I see an expense within the GL that seems off, I might ask for backup regarding that. And I'll either ask the bookkeeper for that or the client. Just depends.
So work papers, I should clarify, sort of means something different when we're talking about bookkeeping and for example, in all of the things that Katie was just saying, those are work papers that show that the books have been reviewed and there is supporting documentation for each of the line items that you would need supporting documentation for which you would need supporting documentation. Work papers for 1040 tax that are not Schedule C related is a different thing. So for example, work papers, when you hear tax pros use that term, might mean not your work papers, bookkeepers. It might mean the page of the tax organizer that covers your itemized deductions, and then the backup for property taxes, and the backup for mortgage interest, and the backup for charitable contributions that go on that, and then the page that is for dependent care and the backup for that, et cetera, and so on. Also, you might hear an auditor refer to work papers. And I don't mean an auditor from the IRS, but I mean the auditor, third-party auditor that is doing assurance work to say, yes, these financial statements are correct. We believe they're correct because we've looked into it and done a lot of work. They have work papers too, which famously have different types of tick marks to show like whether or not they've reviewed a particular file. So do keep in mind that while what Katie was just describing is sort of work papers in our world, and it should be work papers in yours as a bookkeeper as well, that you're handing off to the tax professional, that's not always what people are referring to when they refer to work papers.
And I'll say, if you don't know, ask, because I don't call them the same thing. Like in our firm internally, anything provided by the client, we call source documents. We don't call those work papers. For us, work papers are our internal ticking and tying and our notes and our gotchas and our CYAs. So even just among the people, the pros on this call, we've got 3 different definitions of work papers. So I would say if you don't know, don't be afraid to ask. You might get some snarky tax pro answers, but just smack them back and tell them that you're trying to give them what they want, right? You want to give them what they want, so maybe they could be a little nicer and just answer the question.
There's also a phrase that you might hear called PBC, which is provided by client. Those are the source documents that Andrea's talking about here, and those are also called PBCs in the audit world.
Keep it confusing, y'all. Keep it confusing.
Keep it confusing. Yeah, there are no standards for this. So for us, our work papers are literally an export of a comparative balance sheet and an export of the comparative P&L, so year over year, so that we can see what the difference is, and if there's something outstanding that we're like, oh, that looks like a really big change between last year and this year, and we want to ask the bookkeeper, did you look into that big change? We might just take a quick look ourselves. And then these are in Excel that we've exported them. And then there's a tab for the thing that Erin was talking about earlier, the detail of any of the accounts where we need to see transaction detail, and also any reconciliations that need to happen. So for example, the reconciliation for the benefits accounts, the reconciliation for the W-2, et cetera, and so on. So basically any work papers, they're much more work. We did something and we are proving it. However, when you are working with somebody externally, I think that it is a really good idea to make sure that you are referencing those source documents, the PBC provided by client and the stuff that Katie was talking about, the actual bank statements and things like that. Reference where those are stored so that they can access them if they need to see. A great example, loan amortization schedule. Make sure they know where to find that so that they can go, yes, the bookkeeper did tie this out. And if you tell them that you've done it and where it is, you've just saved them the effort of having to wonder about it. Excellent. All right, let's see. Are tax adjusting journal entries something that all tax pros provide as part of a business tax return filing, or is it considered an add-on with an additional cost? Stephanie, would you like to speak to that?
Sure. I think this is one that you should talk about right up front in the engagement, because I guess the way we handle it is we give you the adjusting entries, and especially if the client has a bookkeeper, we give you the entries kind of under the assumption that the bookkeeper will make them. Sometimes it happens, sometimes it doesn't. But if we're making the entries, I kind of wrap it into your return price, knowing that I'm going to have to do it. So if I'm doing it, I'm going to charge you extra. If the client is doing it or their bookkeeper is doing it, we absolutely give you the entries in the hopes that someone will make them. But I think this needs to be like clear in the engagement up front of like who's responsible for which thing. So
I
I
agree.
don't know. How do
I
you guys do
agree.
it?
As a matter of fact, I'm a big fan of this is something that I mentioned in that podcast that is client facing, is that I think that there should be an accountability cheat sheet, which is basically what are all of the things that the client needs to know are things that have to happen, because delegating to their bookkeeper and their tax pro is not the same as being absolved of even having to know that those things have to happen. You own the business, right? So if you have a list of all the things that have to happen, and then we've got a due date and a name. Is this going to be me, the client? Is this going to be the tax pro? Is this going to be the bookkeeper? Is this going to be the business coach or financial analyst? Is this going to be the lawyer, et cetera, and so on? Because
I
then
love
things don't fall between the cracks.
Yeah.
We only have a few minutes left, and I kind of want to go out strong on here. There are a couple of questions that we didn't get to that I will ask. I'll ask for write-ups on, and I can post those in Circle. But we've got a couple questions here that I'm sort of going to combine, and I want everybody to answer. I think Olivia, we had you written down for what's the best etiquette for bookkeepers reaching out to CPAs? Which months are best? Is it best to bypass admin and show up or email, schedule a call? As a CPA, what would catch your attention in a letter or a bookkeeper's approach? So I want to talk about that, but I also want to talk about if a balance sheet needs a major cleanup, but the accountant doesn't rely on QBO, won't look at the balance sheet, isn't concerned, what would you say to the accountant? Would you be okay with this, or would you insist on a balance sheet to match the CPAs, and why? And I'm sort of combining these because I think they're both about what you as a bookkeeper really want to get out of this relationship with the CPA. So, Olivia, could you please start us off on this conversation? And then please,
Just,
Katie, Andrea, Stephanie, chime in as you like.
I feel like we've mentioned this many times in this conversation, but I just really want to emphasize that the client, it's their job to connect their bookkeeper and their accountant. And a client who isn't interested in taking the reins on that is a bad client. Any good client I've ever had was doing a warm intro into their bookkeeper, had a high expectation of us collaborating just like from the beginning. They liked their accountant, they like their bookkeeper, they want the two people to work together. And I think that if the client isn't doing a warm intro with that expectation, this is a client problem, and it's not actually doesn't have much to do with the accountant and the bookkeeper at that point. I think that, and I think that that's also true for like this secondary question of like this balance sheet and the accountant doesn't want to see it. If your client doesn't prioritize this, how are we going to prioritize this for someone else? It's ultimately their business. It's ultimately their tax return. How can we possibly prioritize their life for them over them doing it themselves? I cannot care more than they do.
Yeah, good point. Other thoughts, Katie, Andrea, Stephanie?
No, I definitely agree with Olivia. I mean, she fully
Nailed
answered.
it.
Mhm.
Nailed it. So what do we do when actually Heather's question is a little bit related to this what happens when the tax pro doesn't care about the balance sheet, but you know that they're a hot mess. Heather was saying, what if you can see that the tax pro didn't make any tax adjusting journal entries? And when you ask, you don't get a response. What do you do with this kind of situation? Do you take it to the client if you're just not getting a response from the tax pros on this and you say, I can see that this is a problem. I have tried to reach out to the tax pro numerous times. I have been respectful. Client, I think you've got a problem.
Yes, absolutely. I was just in a panel with a bunch of CPAs and EAs who said this is really important and they know what they're doing. And so if your accountant doesn't think that's important, you need to know that there's a lot of people who think that it is and they're doing it right.
Yeah,
One thing I want to
absolutely.
make clear, and this kind of comes out of a comment in the chat about the tax professional giving the bookkeeper a copy of the return. We literally cannot. It is not allowed. IRS does not allow us to provide the tax return to anyone other than the taxpayer. So you have to get the return from your client. It's never going to come directly from the tax professional unless the client has signed a 7216 specifically allowing specific tax years to you specifically. It's a whole rigmarole. So it's just easier for the client to give it to you.
But if the tax pro is refusing, I think Sandy was saying like they're literally refusing to provide a copy. Obviously, you're going presumably to your client and the client has a copy. I still think that if the tax pro, I mean, Sandy, why is the client refusing? I mean, why is the tax pro refusing to give it to you? Are they refusing to give it to you because
They don't have written permission to
they
give
don't
it
have
to you.
written permission? That's valid.
Yeah.
Are they refusing to, are they like, I don't want to spend the time to educate you on it. It's the client's responsibility. That's somewhat valid. But if you as a bookkeeper are unable to get a copy of the return, whether it's through permission from the client having the tax pro work with you directly or from the client. I mean, I simply would not work with a client where as a
Yeah.
bookkeeper, if I don't have a copy of the tax return, that is not going to happen
Also,
ever.
most people have portals at this point, right? And so like in my client portal, my client can literally just ask me, please add this person to access this portal.
But
I
they
mean,
have to
that's
sign, they have to sign a
literally,
7216 first to do that. Like you can't just give people access to the portal if you're following IRS rules. They have to sign a 7216 and then you can add them to the portal.
I mean, I have a release for clients to sign. I'm just
Yeah.
saying, like, there's no reason. That's a very small block. Again, that's a
Yeah.
client block, not a me or the bookkeeper block.
I just
Yeah.
wanted to make sure everyone understood because like IRS
Yeah.
privacy rules are no joke. Like literally, I can't even introduce you to my tax client technically because then I'm disclosing that this person is my tax client and I haven't gotten written permission from them to do that. So it's privacy rules are serious. And so if the taxpayer is pushing back, it could be that. Now, if your client won't give you a copy of their tax return, that's more of a red flag to me.
Right. Right. The client giving you permission to freely speak with the tax pro is the ideal situation. Definitely. And then how do you as a CPA want bookkeepers to reach out to you? Which months are best, or what would catch your attention if a bookkeeper's like, I want to collaborate with the good tax pros. I don't want to collaborate with the bad tax pros. How do I meet these new people? How do I how do I get business with these people that I think would be good for, nice people. I want to work with nice people. How do they reach out?
I think my answer is skewed because we're building a different kind of practice. We're trying to eliminate tax season from our clients' vocabulary. We schedule out tax work with the understanding that X% of clients are automatically going to be scheduled after April 15th. So 100% of our clients get extensions in January. So April 15th is not a deadline for us. That's just another day. We do your return on the day you picked on the calendar. So at my firm, it doesn't really matter when you reach out because we don't work overtime, we don't work nights or weekends, even during tax season. So
Okay. Well, I
the
would
only
say
days I would
that's
say
a little
don't
bit
reach out.
unusual.
Yeah, it is.
What are the days
October
not to reach out?
15th, don't call, but any other day of the year, good to go.
That's and can you explain why October 15th?
So when a client files extension, so April 15th is the tax deadline for most taxpayers. If you request an extension, you get 6 months more to file. There's no second extension. So April 15th is coming, we can file an extension. We've got 6 more months. October 15th comes up, that's it. There's no more extending it. It's either on time or it's late.
And
So
for
October
flow
15th is our
through
deadline.
and for flow through tax returns, partnerships and S corps,
Yes.
the deadline is March
March
15th. You
15th.
also get 6 months, so that takes you to September 15th. So
Assuming they're a calendar year filer.
yes,
So if your client
could
has a
be a
year
fiscal
end
year.
other than 12/31, those dates will be different, but most taxpayers are calendar year.
Yeah,
Yeah.
yeah. And what about the rest of y'all who don't schedule? When would you want to be approached by a bookkeeper saying, "Hey, I'm interested in working together. I'm a really good bookkeeper, I promise."
I'm just moving more towards Andrea's model again. We're scheduling any new client out. Everyone gets estimated payments. We meet with them quarterly. So going forward, there isn't going to be this crazy rush. You don't have to close the books by January 10th. Like we're not freaking out over 1099s. Like just tax season is like a bad word. I've forbidden it. I don't know. But I prefer an email because I like to see like a timestamp and proof, like if I don't respond, yell at me, like hold me just as accountable.
Oh, I love that.
Oh yeah, I'm horrible. You got to yell at me. But I love, like a trail, basically. Maybe that's the whole accountant part, but a
Do you
trail
think
of
that
our
that's
communication.
do you think that that's maybe good advice for bookkeepers as well, is to be like, hey, just because you emailed them once and you got crickets, don't feel bad about reaching out again. I have to, everybody on my team knows, hey, if you don't get a response from me on an email, it's time to start sending me another one or texting me or trying to, get out the flags and, get my attention. So I feel like that's not a bad thing then if somebody sends you an email and you don't respond, it's okay to write you again and say, sorry to bug you. I know the email might have come in at a bad time and I just want to make sure you know I'm sincere about this. Is that okay?
Oh, I don't know about anyone else, but like I'm fine with a second email because you never know what's going on in that person's life, for
Yeah.
whatever reason. Maybe it's quarterlies, maybe it's payroll, maybe it's personal, whatever. Like a second email is totally fine.
All right.
And just communication in general. I love it written just so everyone's on the record, I guess.
Like again, if the client, if it's we don't have any clients in common yet, obviously that's a little bit different. But like if we have a client in common, client, warm introduction, and past that, the very first time I talk to you as
Yeah.
the bookkeeper, I say, hey, this is how I work, and this is what I want you to do. And so there's no question of like how to approach me because I say, hey, here's my
Mhm.
online calendar. When you are in a place where you want to talk, schedule a meeting. We're gonna knock it out. We're gonna move on with our lives.
Yeah.
So it's that first introduction that probably is like the hardest. And if you're having to cold introduce yourself, then there's something wrong with your client.
And so
So,
I think for bookkeepers who are looking for more work with
oh,
folks that they're, like if you have a client whose tax pro is somebody you're excited about working with, get in touch with that tax pro, email them and say, I really enjoyed working with you this season. Can we do it again? Do you have other clients? Hopefully you're happy with my work. I love your collaborative approach. Do you have other clients who need a bookkeeper? Because I'd love for you to keep me in mind.
yeah.
Yeah, awesome. Well, this has just been wonderful. I'm going to echo what Danielle said. Um, thank you so much to the panel. This is just a great session to elevate our practices. Erin says it's been so valuable. Thank you all for weighing in and sharing. So grateful there are collaborative tax preparers like you all. And I feel the same. I feel so lucky to have such incredible colleagues. Um, as part of my network. You all mean very much to me, and I really appreciate the fact that you took your time out of your day to be with us, and also last Friday to prepare for this. And I know that you all have your hearts in just absolutely the right places, and that ultimately this is about making lives better for the client and treating each other like the human beings that we all are. So I am extremely grateful. Thank you very much for being here. And
Yeah, I
I'll
want to
be,
add, like,
yeah, please do.
I'm obviously not in circle with everybody here, but if anybody has any questions, like seriously, feel free to reach out to me on LinkedIn. I am happy to like answer any questions if something weird pops up and you don't feel comfortable asking maybe the CPA that's dealing with a client and there's no client information, shared. I seriously am more than happy to answer any
That is
questions.
amazing. That is so kind of you. The websites for each of these amazing women are in the event, so you can get in touch with them that way. But also, if any of y'all would like me to share your email address, just let me know, and I will put that with the recording as well as if LinkedIn is the best place for you, you can send me those links. I will put whatever you want when we release this recording in Circle so that folks after the fact know who they can reach out to. And I will remind you that Andrea can be mentioned in Circle and that she also does one-on-one and small group coaching for newbie bookkeepers, but probably would be open to experienced bookkeepers as well if you have specific questions for her. And with that, I will go to our closing out tagline, which everybody in Ask a CPA knows, but my panelists don't. So I'm happy to share it here, which is knowledge is power. So keep asking questions. See y'all next time.
Bye, everyone.
Bye.
Bye, thank you.